How can I access the money in my life insurance policy? Welcome back to Question and Actuary, where you ask and I reply. I'm Pramod Sharma. Question: how can I access the money in my life insurance policy? Answer: we'll explore 6 ways. 1. Take a withdrawal against the cash surrender value of your whole life or universal life insurance. There may be withholding tax if you withdraw more than the adjusted cost basis, or ACB. That's a measure of the capital you put in. If you withdraw everything, your coverage usually ends unless you find money to pay the premiums. Taking withdrawals has 3 drawbacks. First, you reduce your cash surrender value. Second, you lose the future tax-sheltered growth on the amount you took out. And third, you reduce your death benefit by the amount you withdrew. That maintains the net amount at risk, a topic for another episode. Restoring the protection later may require underwriting. 2. Take a policy loan. Since your life insurance is a financial asset, you can borrow against the growing savings and pay interest on the loan. If you borrow to invest, your loan interest could be tax deductible. With a policy loan, you're borrowing from the insurer. You're often entitled to do this, and your policy contract will give details such as how the loan rate is calculated and what happens if you don't pay the interest. You don't need anyone's permission, assuming you are the policy owner and there's no irrevocable beneficiary. Note that the loan cannot exceed the adjusted cost basis of the policy. The ACB is available from the insurer. 3. Take a collateral loan. That means you assign your policy to the bank as collateral and they lend you money. Here you need the bank's approval. They can change the terms and criteria at any time. The interest often accrues, which means you're not paying it on an ongoing basis. The tax-free death benefit repays the growing loan. 4. Transfer your personally owned life insurance to a private corporation. In exchange, you get the actuarial fair market value, likely tax-free in Canada. You might get money for your term life insurance too. And if your health is deteriorated, the fair market value is higher because the payout is closer. That means more money for you from your corporation. For more, see Taxevity number 80. 5. Sell your life insurance to an investor. This assumes you no longer need your coverage, term or permanent, you don't feel squeamish about an investor gaining, and you're permitted by law. In the US, you generally can. In Canada, you generally can't. For more, see Taxevity number 68. And 6. Donate your policy and get a tax receipt for the fair market value. If future premiums are required and you pay them, they become tax deductible too. You've got options. Start by getting life insurance and building up the tax-sheltered savings. Question: how would you access the money in your life insurance policy? Share your thoughts and ask your questions below. For my private personal attention in Toronto, simply book time to visit the Taxevity Insurance Clinic.